All right, welcome to The Explainer. Today, we're taking a close look at one of Australia's banking giants, National Australia Bank, or NAB as most of us know it. We're going to break down its unique strategy, what's going for it, and of course, the big risks you've got to keep in mind if you're thinking about it as an investment.
You might be thinking, another bank stock? Don't they all do the same thing? And yeah, at first glance, they kind of do. Home loans, bank accounts, credit cards, the whole shebang. But if you're looking at them as an investor, you'll see that NAB is actually playing a very different game. They've got a specific game plan that really does set them apart from the pack.
Okay, Section 1, NAB's Big Bet. So, what is this big bet they're making? Well, it's all about a super focused strategy on one key part of the economy.
So, while a lot of the other big banks are in a total dogfight over the home loan market, that massive, super competitive space, NAB has put its chips somewhere else. You can see it right here. The absolute cornerstone of their strategy is business and private banking. That's the real engine room for them.
And this was no accident, not at all. NAB made a really conscious decision to pour its energy into becoming the bank for Australia's small and medium-sized businesses, SMEs. The logic here is that this market, it offers much better profit margins, and you can build deeper relationships compared to the home loan market, which has become a bit of a commodity. This is their big play to carve out a real sustainable edge.
All right, Section 2 is the bull case. So from an investor's point of view, what's the upside of this strategy? The argument for owning NAB stock, the bull case, really comes down to two things: really nice payouts and a solid defense to protect them.
So, at its heart, the bull case is pretty simple. The bank is financially strong, and it has a really consistent history of looking after its shareholders. Let's dig into the actual numbers.
First up, let's talk about financial muscle. This number, 12.35%, is its CET1 ratio. Now, that's just a fancy term for a bank's core safety buffer, how well it can handle unexpected losses. And at 12.35%, NAB is sitting well above what the regulator calls unquestionably strong. So, that's a huge tick in the safety box. And it's not just about being safe. They've been very active in sending cash back to their owners. Get this. Since 2021, they've bought back a whopping $7.4 billion of their own stock. What that does is it reduces the total number of shares out there, which means each remaining share is worth a bigger piece of the pie. It's a great way to boost value for investors. And of course, that brings us to the dividend. A yield of around 4.6%. That's a pretty attractive income stream right there. For a lot of people, that's the number one reason they'd even consider holding a bank stock like this.
So you might be asking, okay, those returns are great, but how safe are they? Well, this is where investors love to talk about something called an economic moat. Think of it like a fortress protecting a castle. It's a set of advantages that make it super hard for competitors to attack. For NAB, that moat is its brand, which is huge and trusted. Its sheer size, the massive regulatory hurdles you have to jump to even start a bank, and all the money they've poured into tech and data.
But, of course, it's not all sunshine and roses. Every investment has a flip side, and you absolutely have to understand the risks. So now, let's get into the bear case, all the pressures and problems that NAB is up against. Okay, the single biggest challenge facing NAB, and really the whole banking sector right now, is all about this thing called the net interest margin, or NIM. The easiest way to think about it is this. It's the bank's basic profit margin. It's the difference between what they earn on loans and what they have to pay out on deposits. It's absolutely fundamental to their profitability. And this slide perfectly captures the tug-of-war that NAB is stuck in right now. On one side, you have higher interest rates, which should be fantastic for them, right? It should let them make more money. But on the other side, the competition is so incredibly fierce for both loans and deposits that they're basically being forced to give all that benefit away. And that puts a massive squeeze on their profits. So apart from that margin squeeze, there are three other big risks investors are really watching. First is credit risk. Because of their focus, they're heavily exposed if the property market turns down or if their SME customers start to struggle. Second, there's the fear that this margin pressure isn't just a phase, that it's a permanent structural problem. And finally, there's operational risk. We're talking about the huge costs of upgrading tech and constantly fighting off cyber threats. Okay, moving on to Section 4, sizing up the competition. We know their plan is to be the king of business banking, but how do they actually measure up against their main competitor? And here's the tale of the tape. When you put NAB head-to-head with the market leader, Commonwealth Bank, well, the numbers don't lie.
You can see right here that NAB is lagging on some really important metrics. Its return on equity is lower, its net interest margin is tighter, and its cost-to-income ratio is higher, which basically means it's just not as efficient as its main rival.
So, Section 5, the investor's verdict. We've laid out the bull case, which is all about those juicy returns, and the bear case, which is focused on those margin pressures and risks. So, what's the final verdict? If you're an investor looking at the stock right now, how should you be thinking about this?
The first thing you've got to look at is the price. I mean, what are you paying for the stock? After a really strong run-up, NAB's shares are now trading near the top end of their usual price-to-earnings range. And what that tells you is that the market already knows about all the good stuff. A lot of that good news is already baked into the current share price.
And this chart really drives that point home. Yeah, sure, it's still cheaper than the market leader's CBA, as you can see. But, and this is a big but, it's not exactly a bargain when you look at its own history. That price is reflecting a lot of optimism from the market.
So what does that all mean? Well, it leads to a pretty clear conclusion from the experts. The current share price leaves almost no room for error. For the stock to keep going up from here, NAB has to execute its game plan absolutely perfectly. There's no space for slip-ups.
And that leaves us with the big final question that you, as an investor, really have to grapple with. Is NAB's laser focus on business banking a brilliant move that's going to deliver fantastic returns for years to come, or is it a trap that just concentrates all its risk in one basket, making it extra vulnerable if the economy takes a turn for the worse? Honestly, the answer to that question is probably what will decide where this stock goes from here.